Investing in and managing larger multifamily properties can feel like a very daunting task, in part because of the expenses that go into it. Oftentimes, we'll have clients who are either upgrading to larger multifamily properties from smaller buildings, such as a set of single-family homes or duplexes, or they've inherited an asset and they're a bit nervous as to how to run that property efficiently and avoid costly surprises. Hi everyone, this is Brandon with Coastline Equity, a property management company based out here in Southern California. And today we're gonna go over a topic that, once you understand, will help you as a multifamily investor put your mind at ease and set yourself up for success with your real estate investment. And that topic is budgeting for capital expenditures, or CapEx. We'll go over the basics of what a CapEx budget is, why it's necessary, and how to approach it. So let's jump into it. As mentioned before, CapEx stands for Capital Expenditures. It essentially refers to the money that you spend on the big ticket elements of your building, such as roofs, electrical systems, hot water tanks, and parking lots. As with all individual aspects of your property, these items have what's called a useful life, or a number of years before they inevitably need to be replaced. For example, a particular style of roof might have an estimated useful lifespan of 25 years, and depending on when you acquired the building, you may be earlier or later into that lifespan. So now that you have an understanding of what capital expenditure is, let's talk about why you should be setting aside a monthly amount in order to budget for it. As you might expect, these parts of your property can be very costly to replace, and especially if more than one of them needs to be replaced within a short period of time, covering the costs by infusing your own cash into the property at the moment that these problems arise can really be a strain on your real estate business. This is why it's good to take some time, calculate some costs and useful lifespans of different parts of your building, and create a monthly budget. One quick side note here is that the amount that you set aside for capital expenditures is separate from the amount that you set aside for reserves. The reserve account refers to the amount that you keep for emergencies that may occur at your building. Although some landlords choose to build their reserves by setting aside a portion of collected rent each month, oftentimes our clients will supply the property with a single predetermined reserve amount as soon as they acquire the property. Okay, so how do you create a monthly CapEx budget? Generally speaking, you would take the total amount that it costs to replace something, for example, a new roof, and then divide that amount by the time that it has left in its useful lifespan. Then you divide that number by 12 months to end up with a dollars per month amount that you should be setting aside. For example, let's take a roof that your property inspector has suggested will have 10 more years of useful life. You've done some digging and found that a new roof of that kind will likely cost about $20,000. $20,000 divided by 10 years is $2,000 per year. Divided by 12 months per year would leave you with approximately $170 per month. As your tenants pay their rent and you set aside this budgeted amount, you'll be building yourself a cushion of cash that will be used to replace that roof when the remainder of its 10-year lifespan is over. You won't need to infuse any of your own personal cash into the building, and the cost of that item will feel much less like a big sting and more like a routine piece of maintenance. In an ideal world, you would be able to accurately do this kind of calculation for every component of the building and then end up with a very accurate number to budget each and every month. Realistically though, this would be very challenging since there are so many components to a building. It's very difficult to figure out the useful life that something actually has left, and sometimes things simply break before their expected useful life is up. This is why many investors simply rely on a general rule of thumb, using 10% of their property's income as their monthly CapEx budget. This can certainly be a useful starting point, but we also feel that a diligent investor or manager will revisit that initial figure every so often to account for any changes. For instance, if you originally calculated your budget for items like your roof or plumbing system back in 2015, it's very likely that it's a lot less accurate today, given the fact that the pandemic threw everything upside down and prices for building materials and inflation have gone way up. Now may be the time to go out and get some current estimates from different contractors. One last idea that we'd like to share is that, generally speaking, it's easier to set aside a more appropriate amount for CapEx when you have more units in your building, because you're generally bringing in more rent each month. Put another way, it's harder to pay for an entire roof or plumbing system with the revenue brought in from a duplex or quad. Granted, those buildings are smaller, and so the cost of the roof that's needed may be smaller as well. But with a larger building, even though the total dollar amount for the new roof will be higher, you're also collecting more in rent. which means you can set aside more money for CapEx. Plus, you have some benefits from scale here, wherein the cost per square foot of the roof or linear foot for the plumbing lines will be less, since the contractor is working on a bigger project at a singular location. And lastly, a bigger property often means that your contractors will only be working on separate portions of the building at a time, as opposed to a single family home or a duplex where they'll need to work on the entire building all at once. So that was our quick video on an introduction to capital expenditures and how to budget for them. Different investors will have different ways of calculating the amount that they will set aside, as well as different levels of risk tolerance or different preferences for how much cash they want to pay themselves each month in distributions. Let us know down in the comments below if you have any ideas for how you would handle your capital expenditure budget. And if you like this video, please give it a thumbs up and hit that subscribe button so that we can continue to make more videos just like this one. From Coastline Equity, thank you so much for watching, and we'll see you next time.